Hello, I'm just back from Taiwan, where I visited some very interesting companies together with my colleagues in our Hong Kong office. But today I would like to focus on the outlook for 2017. To start with, we are in a period where inflation is picking up. We see the US administration focusing on growth. We also see quite a few of our markets where we invest in having fiscal stimulus. This will be important for the markets going forward in 2017. Next year is the year when East Capital turns 20. It's something we very much look forward to. It's also a year which we think will be good for both emerging and frontier markets, as they really stand out when it comes to yield, valuation and growth. Globally, yields are very low. In fact, 29% of the world's sovereign debt is trading in negative territory. This is up from only 5% 1 year ago. It also means that we think that investors will look for yield, and one way of doing that is to switch into equities. The first thing to look for is to see the switch from developed market bonds into developed market equities, but we also think it will follow more money coming into emerging market equity markets. Several of our markets, such as India, China and Philippines, are showing very strong GDP numbers. Also, Russia sees a recovery of the GDP levels into positive territory. What is important is when you look at the aggregate numbers for emerging markets is how is the growth compared to developed markets. This is something we highlighted already back in 2016 when we started to see a turnaround in this, but we think it's going to be even more pronounced in 2017. And after 5 years of decline in earnings for emerging markets, we saw a turnaround already in 2016, and we think you will see more of this in 2017. When the developed markets trade at peak levels or at all-time highs, this is not the case for emerging markets. In fact, valuations are still 22% below their peak levels. When it comes to discount compared to developed markets, it is around 30%. This discount has been high over the last 4 years, but we think it's going to turn around on the back of better earnings growth and better outlook for the emerging markets economies. We will remember 2016 as a year when most of our strategies outperformed. It was a year also when we saw many surprising things happening in the developed markets world. 2017 will also be eventful. We think risks will be found especially in developed markets and especially in the political arena. All in all, we think 2017 will be a good year for both emerging and frontier stock markets. If you want to find out more on this, I invite you to read our outlook, which I did together with my colleagues in our Moscow, Stockholm, Dubai and Hong Kong offices. Thank you for your attention.